Here we are for some statement of cash flows to jump into some questions. I knew this is what you were all waiting for today, and I'm glad you're here. Let's have a good time and run through it. As always, I enjoy looking at the actual question first and then going back and seeing what information is provided for us. The question states, what is the amount that would be included in Granite's financing activities section because of the building sale? We read this and we know it's a question in cash flows. If it didn't say that up there, if this was mixed in with other questions on the actual test, we've seen enough questions to know, okay, this is going to ask like the categorization, the classification, what type of activity is it, what dollar amounts get added into that. During the year, Granite Company sold a building for $100,000, resulting in a gain of $20,000. So immediately what's going through my mind is what is actually cash flowing? So in this case, we sold a building for $100. That would result in cash in. Cool. The gain of $20, that's a non-cash activity. I don't see any cash flowing because of a gain. The building has a net book value of $80. Okay, great, wonderful. That's where the gain comes from. However, I don't really see any cash there as well. There's no cash in or out because of the $80. We use the indirect method when preparing the statement of cash flows. Well, we know from our practices that the indirect and direct methods are only relevant for what? I'll give you a second to think about that. Well, that is going to be for the operating section, the operating activity section, so not the financing. We will cross this off. I love to dissect these questions. I hope you do as well, seeing the benefit of analyzing every word and why they include certain things in our questions. So distractions all around. Now, when we sit back and think about what a financing activity might be, I actually have the chart here for you, but I definitely want you to memorize this. Here's our little chart. So examples of what are operating, investing, and financing activities. And we're crossing off again 80 and 20 as those were not cash flowing activities. Now, purchasing or selling long-term assets or investments such as a building, we know that's going to be cash flows from investing. Cash flows from financing are activities where you raise money or pay back money that you were borrowing, or you're incentivizing those to give you money to finance your projects. So this is an investing activity, not a financing activity. We're going to cross off 100, leaving us with an answer of $0. We have no financing activities in this question. All right, moving on to our next question here. How should Bear report the transaction in the operating and investing activity sections of its statement of cash flows? All right, let's take a look here. Well, in our statement of cash flows, we are going to have operating, investing, and financing. Here, operating activities. Again, got the nice chart here for you. Kind of take a look as to what we have. Get familiar with that for sure. So we prepare our statement of cash flows using the indirect method. We sold equipment with a carrying value of $500 for cash of $400. Now, normally I would say this $500 is not relevant because it's not a non-cash flowing activity. However, we know that indirect and direct methods apply to operating activities. And since we need to find the operating activities, we will probably need to use the carrying value, because the gain right here, there's a either gain or loss. Well, we sold it for $400. It was valued at $500. So we actually have a loss here. We have a loss in our net income. It goes on the normal income statement. Gains and losses are reported even though they are non-cash flowing. The indirect method of our operating activities has us start with net income and then add or subtract out non-cash flowing activities such as depreciation, amortization, gains, and losses. Now, our operating activities in this case would not be stated correctly because we included a loss that is non-cash flowing. So we're actually going to add that $100,000 gain back to operating activities using our indirect method. This carrying value of $500. It's like you had a stock for $500, you sold it for $400. That's a $100,000 loss. Adding that back to operating activities. So it's not going to be a subtraction that crosses off letters B and D. Now, is this a financing or investing activity? As we talked about in the prior question, buying or selling fixed assets, buying or selling investments, PP&E, that's going to be investing. So we know it's investing. And what are we going to use? Are we going to use the 500 or 400? Well, what actually happened? What cash actually changed hands? This is where we dive into what actually happened. Well, in the journal entry, we would have, and actually I'll write out the journal entry for you. We are going to have, think about, like, I always start with my cash in my journal entries because cash doesn't really lie. It's nice and easy to kind of talk about. Oh man, where's my text box? All right. So our journal entry is going to have us debit cash because we sold something and received cash for 400. We are also going to debit our loss on sale of $100,000 because now that could either be the plug or you can just remember that you credit gains and debit losses. And lastly, we are going to credit our, what is this, equipment or PPE, because we're getting that off our books. You would also include depreciation here, but none is mentioned, so we just don't include that. 500,000, we'd get rid of our accumulated depreciation, but again, not mentioned. That would be a debit as well. Equipment of 500, balances out 500 on both sides. That's a nice little deep dive into something that we'll see later. So what cash actually changed hands? It was only 400, leaving us with our answer of letter A, 400,000 cash inflow to net income from investing activities. I enjoyed that section. I hope you did as well. Good practice here. Hope you all are doing well. Keep going strong. You got this, and I will see you next time.